Hello learners, welcome to our session today. I am your instructor, CPA Aringo Frederick. Our classes have commenced for December sitting, and in our today's class I want us to look at financial reporting and analysis, and the concept that you're going to do today is a common size statement. This question was tested in August 2022. August 2022, question number 5, the just concluded paper. I know some of you will be like, Mwalimu, why don't you wait till the results are released for us to know our fate? Because right now, you're kind of bringing our blood pressure to be very high, right? No, we must continue studying, right? And you can take this opportunity to join our classes. Actually, our classes will commence as at from 8th August 2022. You can take that advantage and join our classes, right? So today's class, my good students, want us to look at the concept of common size financial statements, financial reporting and analysis. So anytime you're talking about common size financial statements, basically, it's just a form of reporting whereby we normally present our income statements and statement of financial position as a percentage of a base that you are going to collect. Say, for example, if I was to present my income statement, I know we are used to present our income statement in terms of figures, right? But in common size financial statement, basically, we are supposed to present our item, or rather, we are supposed to present our data in form of what? In form of percentage. So therefore, in our income statement, the base of this percentage will be what? Will be our sales figure. That is to say, if it is a cost of sales, I'll have to present it in a form of percentage based on what? Based on sales. If it is operating expenses, I'll have to present it into percentage form based on sales. If it is, say, like traveling expenses, the same thing, I need to present it in form of a percentage based on sales. The same way will happen with all the other items of income statement. The same concept will also apply in presenting our statement of financial position. The same concept will apply when presenting our statement of financial position, statement of financial position. The same thing will happen when presenting our statement of financial position. So also presenting our statement of financial position, basically, we need to present it in form of a percentage. And this time round, under a statement of financial position, basically, our base will be what? Our base will be our assets and liabilities. That is total assets and liabilities. Total assets and liabilities. Say, for example, if I want to present my non-current assets, I'm not going to present them in value, but instead you're going to present it in form of what? In form of percentage. And that is to say, what you are going to use as a base will be what? Will be our total assets, in this case, assuming that our non-current asset, say, is 1 million. And our total assets, in that case, I'm having, say, like 5 million. So you'll find that in this case, my non-current asset will be presented as what? As a percentage. That is, of course, 1 million or 5 million times 100. And to make this concept very enjoyable, I want us to handle this question, which was tested in August 2022, question number 5. Let's go through this question and see what the examiner wanted us to do. I know some of you can start marking for yourselves, right? Knowing your fate, which I believe you have managed past that, or rather you'll be getting it correctly, right? So this is our question. These are what we are told. This is August 2022, question number 5, part B. We are told that Dragon Limited is a public entity which has grown in recent years by acquiring established business entities. The directors of Dragon Limited have identified 2 potential entities targeted for takeover. The directors believe that the shareholders of the 2 target companies will be receptive to a takeover. As a prerequisite to the takeover decision, The directors have tasked a firm of consultants to carry out a cross-sectional analysis of the financial statements of the two potential target companies which operate in the same industry sector. Financial statements of the two entities as the 30th April 2022 are as shown below. So we're having statement of profit or loss for the year ended 30th April 2022. I'm having Able Limited and you have Seda Limited. Continuation of the same. These are what we are told that we also told that now our statement of financial position, these are what I'm given. Statement of financial position and income statement for the two companies. So we are told that required, we are supposed to prepare the common size statement of profit, common size statements of profit or loss for the two entities for the year ended 30th April 2022. Common size statement of financial position as of 30th April 2022. And we should advise the directors of Dragon Limited on the best company for takeover. So once you are given such a question, my good students, and you had attended Darasa classes, I know where you are just smiling. I know where you are, you're just smiling. Because this concept is as easy as Mwalimu has stated it, and now I want us to handle it to see how easy it is. So in this case, if you can allow, Mwalimu can do for one company and you do for another company, because the concept will just be the same. So let us handle that question and see. First of all, we need to start by preparing our common size income statement. Common size income statement. So therefore, let us work it out. We need to prepare common size income statement for Abel. Let us agree. Mwalimu will handle one company. Then for the purpose of your understanding and for the purpose of cementing the concept clearly, you'll do for Mwalimu the other company. Because the concept is just the same. So let us start our task. Here I'm having our income statement. I'll do for Able Limited. So we are talking of common size income statement. So in this case, allow me to erase from here so that you can handle it clearly. We are talking of our question August 2022. This is August 2022. August 2022, question 5. So we are talking of common size income statement. So this is Able Limited. Able Limited. Able Limited. Common size income statement. Common size income statement. Common size income statement. Common size income statement. Recall, at this point, you can as well as have what? The same two as they are Able Limited and what? Seda Limited. And Seda Limited. And Seda Limited. So, common size income statement, of course, for the year ended. For the year ended. For the year ended. For the year ended. We are talking of 30th April 2022. 30th April 2022. So this is what you're supposed to do. I'll be having, of course, our income statement here, which I can start with Able Limited. So we're having Able Limited here. Able Limited. I've said I'm going to do for only one company, which in this case, first thing that you can do is just to copy and paste exactly the way our figures are. And that is what Mwalimu is going to do here. We copy and paste exactly the way our figures are. That is starting by revenue. We are having, of course, our revenue here. We are talking of our revenue. Revenue, I'm given our figures here is in thousands. So revenue, I'm given 87,500. Correct. We're having cost of sales. We're having cost of sales. So cost of sales, I'm having 66,500. 66,500. Then gross profit, I'm given 21,000. So talk of gross profit. Gross profit, I'm given 21,000. We're having distribution costs. We're having distribution costs. We're having distribution costs. Distribution cost, I'm given 1495. 1495. We are talking of administrative expenses. Admin expenses. Admin expenses, my good students, I'm given a figure for much here, 2880. So I'm given 2880. We are having operating profit. I'm having our operating profit here. Operating profit. Operating profit, I'm given a figure of how much? 16,625. 16,625. Talk about our finance cost. Finance cost, I'm given a figure of 875, if you can check it out. So that as at the end of the day, we are having, that is profit before tax. Profit before tax. Profit before tax. Profit before tax, I'm given a figure of 15,750. 15,750. Then I'm having income tax expense. So I'm having income tax expense. I'm having a figure of 3150. 3150. Then finally, I'm having what? Profit for the year. Profit for the year. Profit for the year. Profit for the year. My good students, you can clearly see I'm giving how much? 12,600. That is, of course, 12,600. So that is what you have. That is what we have. And as we've said, our task here, my good student, will just be a matter of what? Copying and pasting. And that is what Mwalimu is doing. That is what exactly what Mwalimu is doing. So therefore, let us prepare our common size income statement. We've said that in that case, my common size, I'm going to present this data in form of what? In form of percentage. And therefore, our base in income statement, sales revenue will be our base. And that is to say, for sales revenue, I'll be having what? 100%. How are we going to do that? I'll be having 87,500. We divide by 87,500, of course, times 100. That should give us what? 100%. Right? Cost of sales, 66,500, we divide by 87,500. In that case, times 100, that should give us what? 76%. Then what about our gross profit? Gross profit, therefore, you should be talking of 21,000 of 87,500. That should give us what? 24%. What about distribution cost? 1495, we divide by 87,500. That should give us times 100. This should give us, that is of course 1.7%. 1.7%, correct. The other item, admin expenses, 2880. We divide by 87,500 times 100. This should give us 3.3%, right? 3.3%. Kindly you can confirm. So that operating profit, I'm having 66,625 divided by 87,500, which in this case, that should give us what? 19%. I'm getting 19% here. What about finance cost? Finance cost, I'm having 875 divided by 87,500. This should give us 1%. 1%. Talk about profit before tax. 15,750 divided by 87,500. This should give us 18%. Income tax, 3,150. We divide by 87,500. This should give us, of course, 3.6%. And finally, talk about profit for the year. 12,600 we divide by 87,500. I'm getting a figure of course, 14.4%. 14.4%. So basically, this is our common size income statement. That is our common size income statement. As simple as this. As simple as this, whereby you're just presenting our financials. We're just presenting our financials in form of percentages. So I want you to use the same concept and do for me, for that is a SEDA Limited. Use the same concept and work out for SEDA Limited. Once you're done with that, let us proceed to the other item here, statement of financial position. Remember, what we've done is only what? Our income statement. Is only our income statement. So let us proceed to the next bit and prepare our statement of financial position. The same concept will apply. We said when you are dealing with a statement of financial position, our base will be what? Assets and liabilities. Okay, let us see what we are having here. So I'll go to our common size, that is of course a common size statement of financial position, and that is what we need to prepare. That is what we need to prepare. So basically, these are what we'll be having. This is what we'll be having. Allow me to squeeze it somewhere here. I'm doing again for I'm doing for Abel, or rather Able Limited. Then you'll do for me for SEDA Limited. So I'm just squeezing it somewhere here. Allow me to squeeze it up to that point there so that you can all be able to view it. I believe that is somehow clear, that you can be able to view it. So the same concept applies. Allow me to erase here. Allow me to erase this one for income statement. Let us work out Able and SEDA Limited common size statement of financial position. So I'm having common size statement of financial position. I'll just erase, let me erase all of it. So this time around, you're talking of Able and SEDA Limited. Able and SEDA Limited. Statement of financial position. Common size statement of financial position. Common size. Common size. Common size statement of financial position. Statement of financial position. Financial position. Of course, as at 30th April 2022. So same concept will apply. So this time around, we will be using what? Our assets as our base. So first of all, we start by copying and pasting, where I'm having our non-current assets here. So I'll work out for Able Limited. Able Limited, where we are talking of non-current assets. Non-current assets. Non-current assets. We start by copying and pasting. First of all, the way the figures are, I'm having property. That is a property. You're having owned plant. Owned plant. Our task is easy, just a matter of copying and pasting. Then you're having right of use asset, right of use asset, right of use asset, where we're having 9,800, 7,000. For Able, you didn't have that one. Total, I'm having 16,800. Then talk of our current assets. Talk of our current assets. Current assets, I'm having inventory. We are having trade receivables. Trade receivables. We are having, of course, bank. So that as at the end of the day, I'm having here that is 55,600, right? We are having 7350 for trade receivables. Then we do have 3850 here. I believe that it is very, very visible also in the paper that I'm sharing right now. Then the total assets that we are given here, total assets, I'm having a figure of 33,600. Total assets, we do have 33,600. So let us prepare our common size. First of all, our assets, common size, we need to present our data in form of what? In form of percentage. Therefore, in this case, we start by our property. Property, I'll be having 9,800. Our base now is our total asset, which is 33,600, So therefore, I should be talking of what percentage here? I'm talking of course, times 100, you're talking of 29.17%, or rather 29.2%. What about on the plant? 7,000 we divide by 33,600. In this case, that should give us, of course, a figure of 20.8%. 20.8%. So that in total, I should be talking of 16,800 divided by 33,600, which in this case should give us a figure of 50%. So our total assets, or rather total non-current assets, comprised of 50% of the entire total assets that you're having in the farm. Let us talk about current assets. For inventory, 5,600 divided by 33,600, which in this case I'm given, of course, in this case I'm getting a figure of how much? Times 100, you're having a 16.7%. 16.7%. What about trade receivables? 7350 we divide by 33,600, which in this case I should get a figure of how much? I'm having a figure of 21.9%. 21.9%. Then a bank, 3850 we divide by 33,600, which in this case times 100, I should be having a figure of 11.5%. 11.5%. So that as at the end of the day, if we get for total assets, of course, I'm expecting 100, 33,600 of 33,600, of course, it should give us what? 100%. So in that case, we are done with our current, or rather our assets. Let us proceed to our liabilities. The same concept my good students will apply. The same concept will apply. That's why I'm saying that common size concept is a very, very easy. And that's why Mwalimu was saying that whenever our students are for M Darasa, they are just smiling. And they know the reason why they are smiling. They know the reason why they are smiling, right? So at this point, let us proceed to equity and liabilities. So we are having equity and liabilities. We are having equity and liabilities. So the same concept my good students will apply. We start by ordinary share capital. So we're having ordinary share capital. Ordinary share capital. We are having, of course, our revaluation surplus. Revaluation surplus. I'm having, of course, our retained earnings. We're having our retained earnings, where in this case, we should be talking of 5,600. We're having, that is not 5,600, but I'm having a figure of, sorry for this, we are talking of how much? We are talking of 3,500. 3,500. I'm having 1,750. And finally, we are having 5,600, right? 5,600. So that total equity I'm having 10,850. 10,850, right? So in that case, we proceed to the next item here of non-current liabilities. So talk of non-current liabilities, non-current liabilities. Non-current liabilities. What do we have for non-current liabilities? For non-current liabilities, I'm having a figure of lease liability. So lease liability. We are having, of course, 10% loan notes. 10% loan notes. I'm having, of course, that is 15,7. We don't have lease liability in this first company. Then I'm having 10% lease notes, 15,750. So total in this case, of course, you can have 15,750. Then proceed to current liabilities. Current liabilities. You just see that our task actually here is just a matter of what? Copying and pasting. You realize that our task here is just a matter of what? Copying and pasting. So current liabilities, I'm having trade payables. Trade payables. I'm given a figure of 4375. 4375. We are having lease liability. I'm given a figure of none. Then you're having current tax. So current tax, we are having 2625. 2625. Total equity and liabilities. Total equity and liabilities. Total equity and liabilities. Total equity and liabilities. We are given a figure of how much there, my good students? I'm given a figure of 33,600. 33,600, right? So once we have that, again, our task will just be a matter of what? Copying and pasting. That's a good thing with common size. So let us start copying and pasting. In this case, I'm going to start with our ordinary shares, which in this case I should be having 3,500 we divide by 33,600, of course, times 100. This should give us 10.4%. 10.4%. We proceed to revaluation reserves. 1750 divided by, of course, 33,600. I'm getting a figure of what percentage here? 5.2%. 5.2%. 5.2%. 5.2%. Let us proceed to the next item. 5,600 divided by 33,600, which in this case I'm getting a figure of what percentage? 16.7%. 16.7%. So that the total 10,850 divided by 33,600, clearly you can see we are getting a figure of what percentage? 32.3%. 32.3%. Okay, so the entire equity comprised of 32.3% of whatever that you're having in the company. Lease liability we didn't have. Talk of 10% loan notes, I'll be having 15,750. We divide by 33,600, which clearly I'm getting a figure of what percentage here? I'm getting a figure of 46%. That is 46.9%. Wow, that's huge. Then I'm having current liabilities, trade payables, 4375. We divide by 33,600 times 100. That should give us 13%, right? 13%. We don't have anything there. 2625. We divide by 33,600, which in this case should give us what percentage here? 7.8%. 7.8%. And finally, of course, I'm expecting to have what? 100% total equity and liabilities. So basically, that's what you're supposed to do. Surely, my good students, look at this case. Presenting our financial statements in form of percentages, so that amongst the advantages should be very easy for the shareholders and of course for them to interpret. Like in this case, you can interpret it very easily and say that that maybe talk of our non-current asset. Out of our total assets, non-current asset constitute of 50%. So is it good for the business or is it not good for the business, right? Then you come and talk about our current assets. If you talk of inventory, in our total inventory, you'll find that out of our total assets, inventory comprised of 16.7%, which is very fair for any business, right? Which is very fair for any business. That is to say, this inventory, remember, you can convert them into cash very easily. These are some of the liquid items. If you can recall the concept of working capital management, right? Talk about the aspect of trade receivables. Our trade receivables constitute of 21.9%. So, which is also very fair to any business, right? So you'll find that this is how we normally tend to interpret our common size financial statements. I've given you a lead, which we've worked out under Able Limited. The same question, remember you're asked to work out for 2 companies. I've done for 1 company. The other case, kindly do for the second company using the same concept. To that point, guys, thank you so much, and let us meet in the next session. Thank you.